I'm going to move to this delivery cost posting. Okay, I'll explain to you what is the delivery cost later on. We have got two types of delivery cost, planned and unplanned delivery costs, as you can see here. Planned and unplanned delivery costs. Okay, I'll explain to you what is a planned delivery cost and unplanned delivery cost first. Alright, I told you there are two types of delivery costs. Delivery cost is actually let me pull out the sample invoice. Delivery cost is actually any freight cost or any additional cost that the vendor has incurred to deliver the goods to your warehouse. So in addition to the product price, you can see some entries like this in the vendor invoice, such as delivery costs, or freight costs, delivery or freight costs, which is say about $100. So the vendor may want to pass the delivery cost back to you, because if they don't want to absorb it, someone has to pay it. So maybe the vendor might ask you to pay it. So the total cost will be 430. Okay, 100 being the delivery cost. Maybe the delivery cost is not taxable. Okay, only the product is taxable. So now we know what is the delivery cost, but what is the difference between planned delivery cost and unplanned delivery cost? Planned delivery cost is actually the delivery cost that you know when you raise the purchase order. When you raise the purchase order, if you already know that by dealing with this vendor for so long, if you already know that the vendor is going to charge a certain amount for the delivery of the products, those are called planned delivery costs, because you already know about it and then you plan the delivery cost in the purchase order itself. Okay, so that's why it's called planned delivery cost. Delivery costs which are known at the time of PO. Okay, so these delivery costs will be planned in the PO itself. So I will show you how to actually enter the delivery clause in the in the purchase order itself, and how to settle it when we receive the invoice. What will happen is that when we enter the delivery cost in the purchase order, which I am going to show you in a while, the system will capture that in the purchase order, and when you receive the goods, okay, when you receive the goods, when goods GR is posted, the delivery cost will be posted to a GL account. Okay, so when you receive the invoice and I post the invoice, when the invoice is posted, the delivery cost will be reversed from the GL account. Alright, that's how a planned delivery cost is treated. It will be posted to a GL account, and then when the invoice is posted, the delivery cost will be reversed from the GL account. So let us post this now, planned delivery cost. Then once that is done, we do the unplanned delivery cost. So I'm going to show you the planned delivery cost first. Let me show you. So when you create a purchase order, I'm going to copy it from an existing purchase order as usual. I'll copy it from 87 adopt. Okay, alright, just press enter and off this one. So you see this condition tab in the item overview. This screen here will show further details of each and every item here. The current selected item is this one. If you have one more item here, you can press this to go to the next item, but in this case we have got only one item, so one is selected. Just remember that since this number of fields that can be shown in each line of this purchase order is limited, the system is using this bottom screen here to actually show more information for each and every line item of the purchase order. So this information here is related to this purchase order line item, tie A change, item 10. Can you see the item 10 here? This item 10 corresponds to this item 10 here. So if you have item 20, you will have 20 here in this list. By going to the 20th item, this will change with respect to the 20th item. Okay. Alright, just go to conditions tab. This is where you can key in the planned delivery costs. You know that the vendor, by dealing with the vendor, you haven't received the invoice yet. It's just for example, I'm showing the invoice. But at the time of purchase order, you know that what would be the delivery costs that will be imposed by the vendor. So you can capture that in the purchase order itself. Let's say $100 by okay, in order to deliver 6 units, maybe the delivery cost is $100, but when we raise the purchase order, we know that we are ordering for 10 units, so we cannot enter $100 here, because for 10 units the delivery cost will be slightly higher. So let's call it 150. I'm going to enter 150 as a delivery cost. So how do I enter? Just choose this condition type here. CNTY stands for condition type. Just press here, choose this customs value. Alright, hopefully you have it in the system. Just choose this customs value. This is a predefined key in the standard system. This shows that this is customs charges or delivery costs or whatever it may be. Doesn't really matter whether this is just a description only, but why I should choose this? Where is this configured? How do I know that this is delivery cost? These are the questions that will appear in your mind. So I'm going to take you to the place where this is configured and prove to you that this is specifically reserved for delivery cost postings. Come here, material management, go to purchasing, go to conditions. There should be conditions here somewhere here. Yeah, here. Alright, define this one, define price determination process. Click on this define condition types, define condition type. This is a table where this information is shown. This corresponds to the information that is shown here. See, rebates, material rebate, and so forth. So just go for the condition type that we are using here. Is that OB1? How do I'm going to show you how do I know that this is the condition type that should be used to post the planned delivery cost. Go here, see this, just double click this. The reason why I know that we have to use this is because not through the description, this can be anything, it can freely definable, but because of this condition class. It's a discount or surcharge. The condition class that is defined here is A, which is meant for discount or surcharge. So I can use this condition type to enter the discounts or surcharge. In our case, we are using this to enter the surcharge. The delivery cost is also known as surcharge because it's a additional charge in addition to the goods total value. So the second thing that is stated here is that I can enter this as a fixed amount. I got two options. I can enter it as a percentage or as a fixed amount or as a quantity and so forth. Normally this kind of cost is entered as a fixed amount. And a condition category is a detailed explanation. Okay, these condition category and condition class is actually delivered by the system. These are prefix, you cannot change them. So since we have chosen the condition class discount or surcharge, we need to further define whether this condition type is actually a surcharge or discount. So this is the place where we further define whether this is a delivery cost or a discount. If it's a cash discount, you can choose this, but this is delivery cost. So from this I know that this is purely for delivery cost posting using this A and B here. Alright, we don't have to go through rest of it, but I'm just going to explain to you a bit of it. I need to enter a check mark here so that this can be edited here. If I don't have a checkbox here, this cannot be edited. Okay, I'll show you the difference later on. Let me enter the value here. I'm going to enter 150 as a delivery cost because I'm going to order 10 units. So I'm going to update, press this button to update prices. Pricing type, just cancel this. Alright, see this ZOB1 customs value. You see this is enable, right? And this is disable. This and this is disabled. So the reason why this is enabled is because of this checkbox here. If I disable this, I cannot edit the amount. Okay, you see the condition value is disabled for me because I haven't checked this checkbox here. If this is checked, I can also change this value here. This amount here is showing that what is the delivery cost for this entire purchase order. Alright, let me just check this. No messages, so I can post this. I'm going to post this. So this is how you have to enter the delivery cost, planned delivery cost at the purchase order level. So you enter it. Okay, now it's posted. Let us display it. Okay, now I don't need to display. Let us go to Migo. Before that, ME23. Let me copy the purchase order number 98. I'm going to go to Migo. Let me just check the purchase order first. ME23 and custom value. Okay. If you want to define new condition types, by all means you can go ahead and define a new one, but make sure you choose A, B, B here, otherwise it won't work. Most importantly, you have to choose delivery cost here, and you can define whether it's editable or not and so forth. Alright, close this. Now I'm going to do a Migo. I'm going to go to Migo and I'm going to enter the purchase order, and I'm going to post 6 only and click OK. I'm going to receive it in WH1 and I'm going to save this. So I think this will be, we have to properly calculate. If 150 is for 10 units, for 6 units, let us calculate what would be the delivery cost. Okay, 10 units is 100, so 6 divided by 10 times 150 will be 90. So the correct delivery cost should be 90 for 6 units. Alright, let me see whether that will be calculated. So it will be 390 and 420. 420 US 420. Okay, let me check this document. 1182 generated here. Let me go to the document. Alright, let me go back to ME23N, or I can go back to MB03 to display the document. Yep, this is the one. Content documents. I'm going to check the information here. So $90, you see, it has calculated the customs. Oh right, I forgot to show you something. So how the system knows that this is the account that we need to post to 60001? We haven't specified anywhere, right? Actually, I specified this when I was testing this delivery cost before I record this training. So if you don't enter the information, you will throw an error. You need to enter the freight clearing here, FR1. Sorry, customs clearing FR3 here. So you need to enter the value here, FR3. Okay. This is the automatic posting key, FR3, customs clearing, which is responsible for posting the delivery cost. So how do I enter a value here? I'll show you later. Very simple. I have to delete this and then show it to you. But I'm not going to delete it now because I want to finish the posting. So just bear in mind, it's taking the GL account from here, this FR3. If you don't set a value here, the system will throw an error message. I'll show that to you later. Okay, I think I can show it to you now. Alright, let me just delete this here. Okay, and I'm going to save this. Changes have been made. So let me do one more MIGO for the balance quantity of 1. Oops, this is not the purchase order. Purchase order is this. Oh no. 90 at top does not have any values. Yep, that's right. Let me just copy this. The purchase order is 97. Does not contain any selectable items. Is it 98? Yeah, let me just double check. Is it 98? Yeah, it's 98. The purchase order is 98. So I'm going to receive one more, and I'm going to receive it in WH1 as well. I click OK. Okay, let me try to post this. I will get an error. See, account determination. Ignore this. This is just a warning message. This one, account determination for entry Sun FR3 type, not possible, because I have deleted the GL account, which is responsible for automatic posting of the delivery cost. So the key, look at this, is company code, and this is FR3 is a key, the OBYC key, because the system will use the key, the GL accounts tied to the automatic posting keys in order to let me close this. Let me go to OBYC. I'll explain what is OBYC in detail later on. Let me create a special topic for that. Okay. Subsequent derivatives before this. Okay. Automatic posting keys. MM posting. Okay, this is known as a keys or transaction. Let's call it transaction. So I can explain in detail what this means. Okay, just remember that you need to set the GL account here. Where is that? FR3. Right, go to Sun, and before this we'll go to rules. You have to check this valuation class so that you can enter GL account by the valuation class. If you don't check this, you will not be able to specify a GL account by the valuation class. As you know, valuation class will differentiate a group of materials. So by using the valuation class, you can specify which group of materials should be posted to which account. So otherwise, if you specify a GL account without the valuation class, all the postings, all the MM postings will be posted to this account here without subdividing by the valuation class. So at minimum we'll choose a valuation class and save it, and then so that we can use subdivision by the valuation class, because I want to make sure that all the delivery clause belonging to tire material type should be posted to a particular GL account. Then I can choose this valuation class information here to actually make sure any material belonging to this valuation class will get the delivery cost posted to this particular account. So 60001, I already created this account earlier. COS customs is if you want to look at an account, it is just a P&L account. Enter, see cost of sales, P&L account. Yeah, because freight cost is always posted to a P&L account on the expenses side. So I'm going to save this. So now if I try to post it, I can post it. I'm not going to post it because there's no way to simulate here. That's a problem in good receipt posting. We can't really simulate postings. Okay, so when you go out and come in again and then refresh it, you will be able to post it. Let's not try it. Now let us go and check our earlier postings. This is the one that we posted, right? So customs, $90 has been automatically calculated by the system for the 6 units that we receive. Okay, that's good, right? And it posted to this customs account that we define on the credit side. Credit side means it's an income, right? It looks like an income to us. Income is always credited to a P&L account, but this is not an income yet, because this cost is just parked to this expenses account on the credit side as an income, because it will be reversed later on when we post the invoice. When we post the invoice, this shows that this custom cost is actually assumed by the vendor for time being, That's why it's posted on the credit side. But we know that when we post the invoice, it has to be reversed from the GL account. That there's one thing you need to note here. Since our standard price of this material is $5 and the purchase order price is $50, we are getting a price difference here, right? So the delivery cost of $90 should be absorbed into the stocks account, so that the offsetting posting is balanced. But in this case, the $90 extra is absorbed into the MM price difference account, because there is a price difference of $50 and $5. So later on I'll show one more example where there will not be any price difference, and I'll also show you how the delivery cost is absorbed into the stocks account. That should be the correct way. I mean, this is also a correct way because there is a price difference realized. The delivery cost is absorbed into the price difference account, which is again a correct accounting postings. But in a natural way, we would like to have the delivery cost absorbed into a stocks account, so that we know that the total cost of acquiring of that particular material is so much, which is inclusive of the delivery cost. So we just take note of that. Now let us go to this part here. When the invoice is posted, the delivery cost will be reversed from the GL account. So it will be reversed from here, and the posting will look like this. Let me not open a new one, I'll use existing one. Because this posting is only temporarily parked to a clearing account, because we don't have the vendor account yet. The GRIR account will only hold the actual stocks value, and it will not contain the customs value. And only when we actually receive the vendor, we can transfer the $90 to the vendor's payable, because we need to pay the vendor the $90. Alright, so I'm going to show you how the system will react when we do this. I'm going to go to my row. I'm going to pull out the purchase order. I'm going to pull out the purchase order. Oops. Let me take out the purchase order here. See, the delivery cost is automatically populated. Just make sure that you have selected this option here, goods, services, item, and plus plans delivery cost. Only then you can see the delivery plan delivery cost. If you choose this and press enter, you can see only the goods and services. If you choose the second one, plan delivery cost, and press enter, you can only see the delivery cost, which is $90. So to see both, you need to choose this, both the delivery cost and the goods cost. So what this means is that, okay, now the tax is 10%, which is 39, so the total cost is 429. Alright, 429 is here, or the 10% stock tax should be adjusted. 39, this should be 39. Alright, so this will become 429. Okay, so simulate this. From here we know this is going to be the posting. So vendor A will be credited with 429. See, the GRIR is only cleared with the actual stocks value. See this, Remember that always GRIR account will be cleared only with the actual stock value. It will not hold any delivery cost and so forth. And the delivery cost is $90 is reversed by posting $90 here. Let me go to the material document, accounting documents, right, $90. This will knock off with this, alright, and the vendor payable item will include the delivery cost as well of 429, and 429. So these stocks plus $90 of delivery costs will be posted to price variance and stocks account. This is the double entry postings for these two value. Alright, since there's a price difference, the bulk of the delivery cost is posted to the price difference account. I'm going to show you one more example where this will not happen. Let me post this without any price difference. Alright, so the document is created. This is how we can post it. So I'm going to change this topic to planned delivery cost with price difference, and I'm going to create one more without price difference.